for the ministry to actually get that kind of confidence into them so that there are no credit concerns really?
I'll say a couple of things. Thank heavens I'm a refiner. Thank heavens I'm not a jeweler. It's not easy what you're asking for. Refining is easy because it's all concentrated in one location. It's easy to manage stock coming in, stock going out. It's easy for a Brinks custodian to manage exactly what's happening, whether it sits in the refinery vaults or it sits in Brinks vaults across the country. Very easy. However, when it comes to managing a jeweler, I love the RFID idea. I think that's brilliant. Are we ready for it? Of course we're ready for it. If we can do digital gold and if we can get people to buy gold worth 10 rupees to the 4th decimal point, why on earth should jewelers have any problem with tagging their jewelry? Not from, it gives them two benefits. You have an inventory management convenience. More importantly, the guy who's lent you the gold knows exactly every day. At the end of the day, he knows this guy's got my gold. And if he hasn't got my gold via the RFID mechanism, he's going to call you tomorrow morning and say, where's it? Tell me. Either pay me for it or I'm coming to your shop and I'm going to close you down. So it's a question of, again, as David says, organized versus unorganized. The organized sector, because of corporate management tendencies, has less of a tendency to, what shall I say, tolerate an imbalance in the gold. The unorganized sector would like to do this. It's expensive. I can only think of one thing, and because this is an IBJA conference, IBJA launched this morning an IBJA certified jeweler. For me, that's the beginning. That's the beginning for that IBJA certified jeweler to say, I'm going to do the RFID tagging. I'm going to take responsibility for the gold stock, and I'm going to tell you I'm not defaulting on my gold loan. Full marks to IBJA.
Really is. Gabriel, just taking on to that point, and I also want to extend it to, there was this conversation some time back, an informal one, but we're talking on stage about this now, that one, of course, it is about getting organized, it is about accounting what you hold, and that would bring in a lot of credibility. The other thing is that we're still talking about hallmark in this country. We're still talking about on what gold I hold, perhaps, from 20 years back or 50 years back, and how pure is that, to ensuring getting that gold on ground, getting it purified, getting it certified, perhaps, putting a campaign like that. Do you think, this is a question I would ask Bhargav as well, but do you think that that is something that countries do? Is this something that India perhaps could do?
Absolutely, and especially with working with the bodies like the IBJA. Exactly, I'll echo your comments, sir, is that what the whole vault and Brinks paradigm and custodian is exactly what we're trying to do, and bring it down to the retail level. Instead of having a physical vault where everything stays, we're having an electronic vault where every piece of jewelry is secured and underwritten by someone like Brinks or someone else. And this is the very thing that will actually kickstart an industry or help it regain its power, especially for the small business guys. And the one thing I didn't talk about, which was the macroeconomic dimension of this. We're all too familiar with the Nirav Modi scandal that hit home. And one of the things that really bothered me about it was, how can one incident like this cause the government of India to have a knee-jerk reaction and cancel something like letters of undertaking overnight? I mean, everybody else suffers because of one action like that. And this is the very thing that can be mitigated at the macroeconomic level from affecting everybody in the industry by having this kind of system and accountability, self-regulation, the government's involvement, and all parties playing well, and each one doing their part. Banks should lend, and should lend at competitive rates. Brinks and security companies need to help banks feel confidence by watching over the jewelry. having an open platform and the blessing of the IBGA and the involvement will help bring that confidence and help even more members jump on the IBGA membership wagon to actually become part of this consortium, and then everybody coming together and making this industry more viable and looking towards the future.
You know, Gabriel, allow me to play devil's advocate here. Okay, this is a question perhaps I would be asking. In a country which holds 35,000 tons, I'm not too sure. This is a number that we keep talking in air about. Sure. The other is the purity issue. The third is the government doesn't know how much does India hold, how much do temples hold, and then of course there is this whole current account deficit issue. And then comes in a big fraud like that. It is a knee-jerk reaction, yes, but there are so many unknowns here that there is just so much that needs to be done. This is a question to both of you, and the final question really, because we're taking on time here. But with that kind of a knee-jerk reaction, to ensure that the banks are back on place, with so many NPAs already riding high, something like this is something that we could have done without and can do without going forward to ensure that it does not happen again, that the financing is back. What should India then be moving in? What should the ministry be doing, banks be doing, and how can the trade help in that?
Sure, I think we need to move at different levels. But the first one is we have to understand that if we don't do anything today, it's going to hurt a lot more tomorrow. While we wait for regulation, while we work for more cooperation, we need to take concrete steps on the ground. We're not going to eliminate this overnight, but what we're going to do is slowly and confidently bring more visibility and stability to this industry. And we have to do it step by step. And the mindset that we need to have is we shouldn't worry about what's going to come. We shouldn't worry that, oh, we're going to find many discrepancies. But we have to be more positive and think, well, there may be 5% problem or impurity or discrepancies, but we shouldn't target that. We need to target and say that 95 or 90% of the industry is sane. Let's bring order to that, and then let's slowly weed out that 5 to 10%. And this is my recommendation.
Yeah, I'll just answer this, you can start. I would say the same thing. It's like you had a car accident and you say, nobody drives from tomorrow. You cannot plan for fraudsters. It is not possible. At the same time, as a simple chartered accountant from this city and a member of our institute, I would like to say one thing. Even in the particular scam you named, it was reported on the books as unsecured loan. So to me, there was enough red flag to anybody who wants to use the document. But if the documents I don't want to use, there is a mistake somewhere else, we have to correct it. One thing is very, very clear that 99% of this industry is safe and transparent. We have to highlight this. And if we clear certain things, then we may have the funding, secondary fundings from other source. I was very happy that Manisha mentioned at least the figure, whether I would be more near 35,000 tons than 25,000 tons. This was a biggest source of financing for jewelers for such a huge time, which is the public finance, and they had a very good control on the jeweler, and the cheapest for both sides. This was removed from the system by what we say acceptance of deposit rules. So we have debarred them. We have debarred gold loans directly coming in. So we have created infrastructural problem in the financing of the system, which is harming us more than helping us. There could be, see, you have to stop certain things to help the economy, then don't blame the industry. We have an infrastructure problem just now, but they are not blaming that infrastructure industry, they are blaming the economy situation. If the shipping lines are at loss, when there is a downturn in the world trade, you don't blame the shipping lines as frauds. That sort of outlook has to change. Self-regulation, our corrective representation that let's have a proper transparent financing system, and infrastructurally we are ready. And with little support in the right direction, this industry will grow further.
A lot of hope.
Surinder.
Just one question to Gabriel. How the foreign institutional investors are looking at India in investing in the jewelry business? And what is that we Indians, Indian jewelers need to do so that more and more FII investment is attracted?
Sure, it's a good question actually. We're currently in talks with several financial institutions and other players in this market to see how we should approach it. I will say one thing though, we feature many customers who are Indian jewelers, just established in Dubai, and who are availing of this kind of financing facilities. We're just looking at the Indian market and to ensure that the rates, the approach, and the regulation are actually commensurate with how we're going to present that. So I'll say watch the space. We can have a conversation after that, but please, anybody who feel free to come up and we can keep everyone abreast of the
And what's the
situation.
criteria for this financing then?
It's a good question. Again, I'm not a banker myself, and I will leave that to the people who actually finance industry. But obviously, you have to be in good standing and willing to sort of provide visibility over your stock, and be willing to work with an independent third party like Brinks to sort of be a person who's monitoring that over time.
So it basically comes to getting organized.
I think, Surender, I would have answered your question 3 days ago saying we are in low priority area, not allowed. But the RBI circular of day before yesterday, which is allowing 150 million at LIBOR plus, the base rate plus 2, is perhaps the first change I can see that this is a document without any debarment of jewelry industry. Or they have missed out and they're going to bring it tomorrow morning, I don't know. But today, I feel this is there. And if you look at, again, you look at the other industry where we both have some common friends, we have found international bank financing more than Indian banks.
That's true. That's true.
All right, with that, I think we're fast approaching the end of this and do not want to be in the way of lunch for sure. But thank you, panelists, so much. I think it all just boils down to one point, that we have to be more organized, more self-regulating, and that is the only way we will perhaps India or any other trade financing company internationally as well willing to pass on further credit here. Thank you so much, panelists. It has been amazing talking to you and has been a great conversation here. Thank you.
Thank you.
Thank you very much. And let's put our hands together for our entire panel. I'd like to invite Mr. Nilesh Gupta and Mr. Anurag Rastogi to kindly present mementos to our panelists. To Mr. Gabriel Nasser. To Mr. David Gornell. To Mr. Bhargav Vaidya. Mr. Bhargav Vaidya. And of course to our very learned and distinguished moderator, Ms. Manisha Gupta. We'd like a nice group photograph of all our dignitaries on stage. Thank you to Mr. Nilesh Gupta. Thank you to Mr. Anurag Rastogi for doing the honors. Thank you, Mr. Gabriel Nasser, Mr. David Gornell, Mr. Bhargav Vaidya, and of course, Ms. Manisha Gupta for a very riveting session.